tutorial, I'll be going through with you GameStop stock. Just type it in Google, paste, and click enter, and you can see the name here, GameStop Corp, and the Nasdaq symbol is GME. It's 3.81 US dollars for one stock, and it's a million size firm. So it's a medium size firm because it's a million market cap. So I would say it's a medium size firm. It's paying a lot of dividend yield. I just want to say that any firm that is paying dividend, that means they are financially very, very strong, because after paying their liabilities, costs, creditors, they still have extra money. That extra money they pay to shareholders as dividend. So this is very important to find out. Like, if a company is paying dividend, that means they're financially very strong. Let's go to Wikipedia and see when was this founded. It's founded in 1984, 35 years ago. Now let's see what the employees have to say about this firm. Let's copy this exactly from Google, paste it here, type in Indeed, reviews, and click enter. And then I want to see, it has 7,700 reviews and 3.5 star. Read through the pros and cons yourself and check out the salaries they're paying, the photos, the jobs listed, the question and answer asked. Now let's go to Glassdoor as well, and we will see what reviews it has in Glassdoor as well. We can see it's 4,200 reviews and it's 3 stars, and you can read through the pros and cons yourself. Look at the jobs listed, the salaries they're paying, the interview questions, the benefits they're giving, and the photos of the firm. Now let's go to Yahoo Finance, and I want to know the salaries the key executives are getting. So I will just paste it on top, and I can see, I will just click the symbol in the Nasdaq, which is GME, and go to profile and check out the sector, industry, and employees. And it has 5 key executives, but 4 of their salaries have been shown. I can't see one salary, it says not applicable. You need to search why it's not applicable, because the more information we have about the salary, the more transparency there is. Let's go to Justia Patents and see the patent it has. Let's click on the search bar, click enter, and it doesn't show up. So I'll just go back, click enter now, and now I can see in 2000. Now please look at applicant or assignee, because these are people who have full rights of the patent. So I can see patent in 2012, both patents in 2012, and I guess this one is the same as the one we are looking at. Let's go to images, and let's go to GameStop, and I think yes, it's the same thing. So it only has 2 patents. So the more patents a firm has, the more stronger it is, and it's hard to beat that firm. So that's brilliant. It has 2 patents, and that's brilliant. And please keep in mind to look for recent patents in 2015, 16, 17, 18, because that means they're still innovating. So that's important as well. Let's go to macro trend, and let me see. Let's go to price ratio, price book ratio, and paste in the symbol. I think it's GameStop, yes, GME. And if price book ratio is less than 1, that means stock is cheap, it's a discount, it's a sale. If price book ratio is more than 1, that means stock is expensive. So let's have a look once it loads. Please be patient with this website because it has a lot of data, so it will take time to load. Don't worry, be patient. Please let me know if you have any questions for me, or if you want me to do research on a particular stock that you want. So please let me know as well. So it's just loading right now, we have to wait. Okay, I can see that right now it's 0.3, which means that the stock is 0.3, which means stock is 70% off right now. It's a sale of 70%. It's very cheap right now. If I see in 2019 or 2019 April, it's nearly, I would say, 30% off, because people who bought in April 2019, they paid 8.65 US dollars to buy something that was $12.63 worth. They got 30% off. But people who bought in 2007 October, they got it 3.97 times more expensive. they paid $41 to buy something that was $10 worth. They got a lot more expensive. Right now, it's a sale of 70%. Let's go to other ratios. I want to see current ratio. If current ratio is less than 1, that means stock is risky because liabilities are more than assets. If current ratio is 1.5 or more than that, that means that the stock is safe. It has good margin of safety. Let's have a look. Right now, the current ratio is less than 1.5, so it's a risky stock. Let's look at the previous trend. So it's constantly fluctuating, there's no consistency, but it has always been less than 1.5 consistently. So it's a risky stock overall. In terms of current ratio, let's look at debt equity ratio. This ratio will tell me if the company is mainly operating on debt or equity. I'm looking for zero point 0.5 or less than that for it to be brilliant. Let's have a look. Okay, right now I can see that it's more than zero point 0.5, so it's a risky stock in terms of debt. Let's look at the previous trend. Has it ever been below zero point 0.5? Yes, it has. So I would say that since we have data 2005, since 2005 October, it's more than zero point 0.5 up till 2007 April, but since 2007 July, it has always been less than zero point 0.5, which is brilliant, which means it's safe up till I would say 2019 January. It's a safe stock, but just recently it became risky again because it's 0.79 in 2019 April. So let's go to return on equity. I'm looking for 8% or more than that for it to be brilliant. Let's have a look. It's a minus return, which is not what I'm looking for. It's a minus return. I'm looking for 8%, but right now it's a minus return. Let's look at the previous one. Like, it's consistently minus, and then it's, you know, more than 8%, and then again it's minus, and then it's more than 8%. So since 2005 up till 2012 April, it has been consistently more than 8%, which is brilliant. Then it's minus for a while, and then again it's more than 8% consistently up till 2017 October, and then 2018 January it has been below 8% consistently, and a minus recently. So it's fluctuating, I guess. So it's up to you to decide.